The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, good afternoon, folks. At the break, we're going to have Norman Winsky of Astro Trends come on to go over some information that he wants to share with us. We have a lot of astrological things occurring this month, as you know, so he's going to share some of his ideas with us. And then tomorrow, we're going to have Rich Anderson on the Commodity Show, and he's going to talk to us a little bit about the jet stream and how it'll affect the crops. And so this is something that I think will have interest for those of you that trade futures for tomorrow. I started the show today with the chart of Netflix. Someone asked me to do a chart on it, and I did one a month or so ago, and it has these monstrous gaps. I know it's a $400 stock, and it could have some gaps, but these are very large gaps, and it does not make for a very good trading vehicle, in my opinion. Right now, Netflix looks like it's making some type of a triple top up in here, very similar to what we're seeing in a few of the other markets. But I would stay away from any market that has, huge gaps like this. Stocks are, they have these tendencies because news hits these, and they are subject to manipulation, I guess, but that's what happens. So stay away from that. If you want to look at something that's easy to trade, that trades off the numbers, if we just take a look at the 5-minute chart on the Treasury bonds, one of the most actively traded things in the world under the the currencies, of course, but in the futures market, it's one of the biggest bonds and notes, and you'll notice over the last few days, yesterday we made a perfect 61% retracement of the move from, back on April the 13th. And today's high so far was the exact 61% retracement of yesterday's high. So those are the kind of things that you want to look at. So you have ratios and patterns together without these gaps that you're looking at. And that's what makes it, really, really difficult to try to figure out. And that gaps show some type of unknown quantity that we don't know anything about, and that's the main thing. And remember, with the bonds this time, we have a situation where June bonds are certainly different than September because of the way that they've been treated by the CME on the way the contract specifications were written several years ago when this contract first started to being traded. So just keep in mind to try to trade things without too much gaps and stay away from gaps if you can. But unfortunately, if you're in a trade and you have a gap, you have to manage it. And that's one of the factors that we have to face when we're trading. I wanted to take a quick look here at our VIX index because we're coming into this real key time of the year, which is one of the very strong seasonals that the stock market has, which is sell in May and go away. So we want to keep watching that because we're coming close to we're at the middle of April now. But if we take a look at the VIX index here, you can see that we've got a really good chance to go down below the $12 level, even get down to the lows where we were way back in July of last year when the market was making a high. We could get all the way down to 10 in the VIX. That's 30% from where we are right now, but we've got a couple of weeks to get there if that's going to be the case. Now, remember, last July, in the New York Stock Exchange index, we were making a new high, and we are still right at that same high, folks. So we've got to be very, very careful to take a look at that. Oh, we've got a caller from California, our friend Brent. Brent, are you there?
I am. Good morning, Larry. Wanted to welcome you back.
Okay, thank you, buddy. What can I help you with today?
We're going to ask you about gold and silver. It looks to me like gold's a little stronger as far as on the daily.
Yes, gold is acting a little better. Silver. Let's start out with we'll start out with gold first because you asked about it first, but it's still acting pretty good. It's not acting well, like Basil said. It's not acting badly, but it's not acting good. So
Yes.
the key here, and I've been watching this level very, very closely because we have some higher bottoms here over the past few days, and it looks to me that the gold, if it can get above, the 1205 level, we got a chance to get it up to the 618 at 1243, but it's really got to get moving here, because the problem is, Brent, we've been rallying now exactly a month from March the 16th, when we made that low down at 1140, and yet we're still lower than we were 8 days ago. That's not a good sign. You'd like to see that to be making higher highs now instead of being in a consolidation range.
Yeah, it's a little tricky at this point. What are your thoughts on oil, Larry?
Okay, let me finish silver first, because silver is even a little bit clearer to me, because silver has gone below the 786, the 61% retracement, but has bounced back above it. So that's a good that's usually a good sign. But usually when it breaks the 618 like this, you're going to get a move down, to the 786. So the jury is sort of still out on this. Oil, I think, is really pretty strong today, and it looks like it's finally breaking out of that area. In fact, if the best way to look at it is to look at it with the 200 or the 4-hour chart, and that tells us this is something that I've been watching for the last couple of days. As you know, I'll put this up here, because I know you look at the stuff I send out each day. But you'll notice that we've got a really strong pattern forming now with this breakout in oil that should take us up to the 57.50 per barrel level in the crude, and that's that's what it looks like to me where it's heading, and that's going to be a pretty good rally off the bottom that we made, at 42. That's going to be a better than 25, percent rally on the long-term charts.
All right, very good. I'm looking forward to your guest coming up, Larry.
Oh, Norman, yeah, he's a pretty smart dude. Well, anyway, we'll have a good chat with him. Sure. Thanks for calling in, Brandon. All the best to you.
All right, same to you. Take care.
You bet. Okay, so we got the crude oil covered, we got the VIX covered, we got gold and silver covered. I wanted to talk just a tiny bit about the IBB, because that's been, one of the strongest of all the ETFs. And we want to keep an eye on this, because we're hanging right at the 61% retracement here. We're just a tiny bit above it. And I still think this market has legs to do just a little bit more than what we're doing right now. And but we are forming some really significant head and shoulders patterns in markets like the New York Stock Exchange Index. But I believe the New York Stock Exchange Index, which we will cover next, I'm jumping around here a little bit too much. Got to get back in the old groove here of doing things simple and one at a time. Let's just do the NYXC right here. Give me 1 second. And I believe, oh, this is great. This is exactly what I was hoping. I talked about this on Monday's show, and I believe we are heading towards it. That's what it looks like. We're making new highs now. We've finally broken out of the highs from July, September, December, and February, and now we're in new high ground again. We need to get up about another 3% to complete the most beautiful butterfly you're going to find in a long time, and hopefully it's going to come towards the end of this month, and we'll be able to see if this is going to be a turn here in this market. We're seeing some divergences here because the S&P is not as strong, and nor is the Dow Jones, and but the New York Stock or the Nasdaq, but the NYSE, which has been that's the one that I follow the most, has basically has seen rotation now, and it's starting to get the market to move much higher. However, very, very slowly. We gapped up today, which in itself is very unusual for this. But we should be heading up to about another. That's about another 3% is what we're looking at in the New York Stock Exchange Index, and we prefer to do it slowly into the end of this month, and then we can rely on that seasonal that's very, very strong that Norman Fosbach that does the Stock Market Almanac has done a great deal of work on this, and it's one of the best seasonals that they have in the stock market. Now, I wanted to quickly go over, because we have Norman coming in at the break, I wanted to talk just a tiny bit about the Dow theory, because folks, I still think the Dow theory means something. It's been going on for a long, long time. Richard Russell's been doing it for years. It's been working for years, with the exception of the last couple of years of quantitative easing. But you can see here that we're having a tremendous divergence here in the Dow Jones transportations versus the rest of the market. That's part of what Dow theory is. The reason is that the transports supposedly are not getting orders of new products, and that hasn't filtered down the line yet to the other parts of the economic things that they look at, like sales or GDP, or whatever those economic numbers are that they look at that. Now, if we look at the Dow Jones Utilities, you're going to see something exactly the same. And the fact is related more to interest rates and dividends than anything else. And you're going to see another situation where we have the Dow Jones utilities have made new lows on the years, as have the transportations, and yet they're not getting much of a bounce here. So we've got a real technical things that are happening in the market that will be very important for us technicians. Now, most people that watch CNBC, they look at a chart and they don't try to make any sense out of it like we try to do. But they used to say that looking at charts was like looking at the entrails of a cat. And I'm not sure that amounts to that anymore, because of the work that was done by Dr. Andrew Lowe to tell us that pattern recognition does have a really sound place in the market. So we've got a lot of things occurring here in the next couple of weeks. So it should be a lot of fun coming into May. That'll be a good thing to be looking at. So the first question that I had was about Apple. Apple is a stock that is acting weaker than the market, and it has been, made that big high. And Apple, they get the greatest, they get more free advertising than any company in the history of the world that I can ever remember. But it's hasn't really done very much. So it's still holding above the 382 retracement, which is good. And we'll take a look and we'll see what's looking. Now, I haven't put the chart up of the NASDAQ up yet. I'll do that right probably after the break. I wanted to talk just a little bit about Apple here, because we did hold the 382 retracement a month ago, but we haven't gone nowhere for a month, and that's either consolidation or distribution, folks. And with everybody bullish the stock, I think it's more distribution than it is accumulation. This is, I guess, one of the most widely held stocks in the world now. And it looks like to me that we've got a couple of lower tops in here, and it is acting less bullish than it used to in the rest of the market. So we'll take a little break here. We'll come back and we'll look at the NASDAQ.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartlys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we're back, and we have posted into the Tiger TV the chart of the NASDAQ, and it shows the lower highs that we're looking at. We have actually, it's that 135 pattern that we're watching that looks very, very interesting. And so far we've not, exceeded those highs. It's lagging behind the S&P. It's also lagging behind the NASDAQ. All I know is these patterns are getting a little more bearish each day. And we have this complacency in the VIX index, which is I think extremely important. And as a matter of fact, what we've done for ourselves here is to increase our trading limits for the VIX index. It doesn't trade actively as some of the other things, but it does move a lot. And so we've increased our ability to add contracts for the fund. So that's what we're watching. We haven't done that yet, but we're getting very, very close. I think any move above 14 or 15 we'll probably have to start buying, but we'd like to see it get down to about 10.5 or 11 in that VIX index, and that would be the ideal situation. Now, if we take a look at the Dow Jones, along with the Bradley model, we'll be able to see that we're looking at that same three pattern that we have, the 135 pattern, but it's a little more bullish than the NASDAQ. So it's still not quite time yet. That's my opinion. I have not instituted any short sales I've been actually had a few longs, but nothing short yet in the S&P. But boy, my hand is on the trigger. Just being patient. I'd like to see that one more high in the New York Stock Exchange Index, and possibly new highs in the Dow, and also the Nasdaq, with some type of really good news coming in to the markets from somewhere. I noticed today I happened to be walking past the CNBC this morning when they were replaying the picture of Mario Draghi being harassed by one of the hecklers, jumped up on the table and poured paper on his head as a young girl, and really very, very troubling, because you realize how susceptible some of these public figures are to something really, really crazy happening. And that's the thing that you fear most, I guess, of people in public life that are controversial at best. And that's something that everybody has to worry about if you're in public life. Fortunately, folks like us, we don't have to worry about that. Okay, now the other question that someone has asked me is about the IBB. Let me get this one up here. Hold on a second. Let me say A, B, C, D, E, F, G, H, I. There we go. The old MBA program. I've already covered that. Darn it, Larry, why did you do that? Well, I guess I should cover it again then, because I don't remember covering. I remember putting the chart up, but I don't think I left it up long enough to talk about it. Well, we'll do it again just to be safe. This has been the leader of the pack, folks. And it is right now we're just trading a tad above the 61% retracement. It's been up for 10 days. I'd like to see that get up into new high ground also, but we'll have to keep watch it for just a little bit to see that it's going to make it, whether it'll get there or not. We'll have to wait and see if it'll get to that spot level or not. Someone asked me a general question about interest rates, and the question is, do I think they're going to go higher? Well, of course. Now, Rich Anderson forwards to me every year, the 5 biggest predictions that people make and how they turned out. Last year it was 0 for 5. And the number one thing on the predictions that people had made was the Fed will raise interest rates in 2014. Well, in fact, they did not do that. So now it's supposed to be either June or September, and they're talking about not being able to shock the market. Folks, there's no way you can not shock the market if you're going to raise interest rates. You're just going to have to do it. They can do all the jawboning that they want, but eventually they're going to have to raise rates. Well, I shouldn't say eventually, because they haven't done it, for 6 years, which is the longest time in a very, very long time. But this bull market has been going on since 1982, and so it's due to come to an end. And when it does, it's going to end very, very badly, and it'll end badly for the whole world because of the quantitative easing. Italy, who has a terrible economy, has negative interest rates. There's so many of them. Switzerland, negative interest rates. Japan, negative interest rates. Germany, negative interest rate. This is not normal, boys and girls. Okay, we're going to take a little break. We'll have Norman Winsky at the break, and we'll be right back. Dow still quite strong.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're waiting to get connected to Norm Winsky from Astro Trends. The problem was I gave TFNN the wrong number, and hopefully they'll get him connected here in just a second. The prefix was 239, not 269, because that's the prefix of my grandson's telephone, so I got it mixed up. But he'll be back. The chart that I've posted into Tiger TV is the chart we're going to start with, and you can see it has some interesting, chart formations with lines that I'm sure he'll try to describe to us. But that's what we're waiting for right now to see if we can get him on. It looks like he's looking at that same support that we had from back on the week of March 11th. That is really key, because if we go below that, that is going to signify a triple top in the S&P and the Dow and all these others myself, and it would be a false breakout probably in the New York Stock Exchange Index too. So we'll just have to wait and see. Norman, do we have you on the line?
Yes, Larry, this is Norm.
Hi, Norm. Thank you. Listen, we're on page 2 right now. We just posted it into Tiger TV. That's your S&P Cash Index Daily. Do you want to discuss it, and we'll go on to the next one?
Well, page 2, I was just going to do a quick review of last month. I was on about a month ago, and what happened a month ago is relevant to what's happening here in the next day or so.
Okay, why don't you go ahead with that, and we'll
okay,
then we'll move on.
You may remember you and I were talking about the Bradley type model, I do a Bradley style model. Not, I've changed it quite a bit over the past 40 years. But the deal on the Bradley model, most people would agree. I think you were enthusiastically agreeing that it works great for a while, and then then all of a sudden it'll flip upside down on you. I think I've developed the method to with a high degree of accuracy forecast when that's likely to happen. The highest confidence factors to forecast that's going to invert are the outer planets when they go direct or retrograde. This is due to the Earth's relative motion to the other planets. Something, if you were to go plot the planets, you'd notice at certain times it looks like they stop their motion and reverse the direction. The outer planets are from Jupiter on out. I don't know if I mentioned that or not. And so on the 14th of March, Saturn turned retrograde, and I was forecasting that the model would invert there, and the market had been going down into the middle of March, and we had a big reversal on that weekend, so that worked out well. And we have something coming up like that in just Thursday night into Friday, so we'll be talking about that here in just a few minutes. So
this is there was
other spots here that people can record and go back and check. I know we're short on time, so I'm going to kind of go fast here.
Don't go fast. We like Norman. Don't go fast. Go slow. Slow is better for us. Old people, we grasp things better when you go slow. If necessary, we'll have you on again, but go slow and make it as easy as possible for us, my friend.
All right. Well, the bottom line here for last month, middle of the month, had the big change in trend, focusing on the planets. One of the neat things about using the astrology is not only does it give you timing, but it's like a Geiger counter. It tells you where the best opportunities are. It gives you qualitative information as to what markets to look at, using the astrological theory. So the big focus in the middle of March was for cocoa, coffee, copper, hogs, stocks, and T-bonds. So, as we see here, so if you go look at your charts there, and we'll be looking at some charts here in a minute, you'll see that several of these markets had very good turns there. Let's see. Oh, another neat thing we talked about. I think I was on there. Well, we had some technical difficulties. I was scheduled to be on there right around the 19th of March, I think, just ahead of the solar eclipse. And if you look at your S&P chart, for example, we made a nice short-term top there that occurred. The solar eclipse actually occurred before the market opened on the 20th, and we made a nice short-term top there where we were topping there Friday the 20th to Monday the 23rd, and made a nice short-term top there. So you want to watch, that sort of thing. I'm a fan of the solar. That was a special solar eclipse. That was like a mega solar eclipse. Usually solar eclipses aren't that big of a deal. Lunar eclipses, though, have a very good track record historically of bringing a quick down to the stock market. And you may remember, Larry, over the holiday weekend, we had a holiday weekend there. The Friday the 3rd, we were closed. And Saturday the 4th, we had a lunar eclipse. And we had after the close on Friday, they released the monthly labor statistics, and people were not happy with those. And the futures, even the futures that were, the stock market was closed.
Overnight market, yeah.
We had a big down there, and even into Sunday's trading. And then the lunar eclipse went away, and then we had a huge reversal to the upside for Monday's opening. So that was kind of fun. Now each month, I'm following along too here. I'm moving ahead now, Larry, to my hard copy 2, which is stocks at the top there. Okay.
Okay. That's page 2.
So each month I reprint the previous month's forecast with the forecasted key dates, change in trend dates, and then I show you the chart and mark on the chart those dates so you can see if you could have made any money with those dates or not. And the way I count it, I got to be right within one trading day, or it's a miss. So for March, I had 9 dates. Let's see, we had about 4 Fibonacci dates. I also have Fibonacci mathematical models that project dates, and I had about 5 astro dates, and we hit 8 out of 9 of those. So it was pretty good. You can see on the chart there where the arrows are. Those are the potential winners where you had a chance to make money. If you look at the first one there, it's pretty obvious. That was the high of the month. You had a little high there, and then the market went down, and so that's how that works.
Okay, now the question that people are asking already is, what do we do this month?
Okay. Well, I'm leading up to that, if that's okay, Larry.
Okay, go right ahead.
All right. So here's your Bradley style model now that I do. I call it a planetary index. On the next page, hard copy 3, did I say with the results.
Yes.
There's the blue line was the forecast. Yeah, the line done it the traditional way. All the planetary energy for March was just down, down, down. But at the red arrow there's your Saturn turning retrograde. That actually, this proves my theory here that the energy got flipped to the other way, and I inverted the line there. This is all the line was all in advance, and I was forecasting that energy would turn from negative to positive, and that's exactly what happened. Okay.
So you're looking. Is anything going retrograde tomorrow, or you said something was really big?
That's why I asked to be on your show, Larry, because we got huge things happening here in the next few days. Okay. So we're going to get to that. There's you can see the T-bonds real quick. These are the ones I focused on last month, and these are the same, by the way, just by, I don't know what you call coincidence or whatever, but we have some of the same themes for this big change in trend we have coming here in the next day or so. Same markets are being pointed to by the planet. So here we have the T-bonds. You talked about them earlier in your show today, and there we have the T-bonds. So look for, we're going to be getting to that in just a minute. You can see how things went. Here's the hogs. Hit 3 out of 3 on the hogs last month. There's your coffee. I hit 4 out of 5 on the coffee. And we're up to a really neat thing here, Larry. We have something where I featured in my letter, which went out the 1st of March. I'm sorry, the 1st of April now. I put this in the April letter and showed you how I'm going to teach your folks now a crash course in astrology. Now we have 12 signs. Leo the lion is one of the signs. Now, Leo the lion is said to be the king of the jungle. Now, each sign has what's called a ruling body or ruling planet, and so maybe we can figure out what the ruling body for Leo the lion is. Now, that might be the ruler of the solar system, which is the sun, right, Larry? And so
yes.
The sun is bright, golden, and glittery. Larry, can you think of any commodity that might go along with the sun being bright, golden, and glittery?
Maybe gold.
Hey, there you go. Now,
See?
Another commodity that might go with the sun is maybe orange juice, right, Larry? Because it's the sunshine drink, right? Now, let's look at the two charts. I think hopefully you have those. I don't know. I can't see
Yes,
the visual that you're doing there. I'm looking at my notes. So hopefully you got these two charts up there, and the folks can see that these charts are very similar. Now, if we go down to the bottom of my page here, you can see I've overlaid the July OJ on top of the June gold, and it's pretty amazing. What do you think, Larry?
That's a very high correlation. You wouldn't think that there would be a correlation between orange juice and gold, but there certainly is, Norman. You have to give yourself
a
gold star for that.
There's an astro connection there, you know. So that's pretty. I think
what is it? The sun must be the ruling planet then for both gold and or OJ.
Yeah, exactly. The sun and Leo. Okay. That's it. And I believe if I remember correctly, you are a Leo, right, Larry?
That's me. 28th of July. Yeah.
There you go. And you like orange juice,
very interesting.
Right? You like gold and orange juice, don't you?
I like gold. I don't like orange juice because I'm diabetic, and that's the potassium cyanide for a diabetic is orange juice. Okay. So
maybe when you were younger, you liked it. Maybe when you were younger, you liked orange juice.
I stopped drinking mimosas a few years ago, but I've almost got my diabetes under control now, so I'm all right.
So let's look ahead now, Larry. Right? So what's happening now?
Okay.
We just had just to take one quick short step backwards. Earlier this week, I kind of get into the flow of things here. Monday morning, we had a big thing happening with the U.S. natal chart, which implies that we should be looking at U.S. financials such as U.S. stocks, T-bonds, and dollar. And I think we had a little kind of a short-term top there on Monday morning. Also had some, I won't get into the political stuff, but we had some interesting things that kind of fit this Neptune thing where there's some deception and so forth in the U.S. negotiations and so forth where the things aren't going so well with some of the international negotiations. And then here's the big one I've been talking about, Larry. Thursday night, that's the 16th, AC after the close, Pluto in Capricorn is turning retrograde. These outer planets work about 75% of the time to give you, let's see if I can remember the three things now, not only give you a change in trend in the market And also often they occur, the outer planet station points occur within one trading day of the high or low of the month for the stock market. And number 3, they have the power to invert the energy, the astrological or planetary energy that's expected. So if the energy is negative, they can turn negative energy into positive energy, and vice versa, kind of like a binary switch on an electromagnetic field. Okay? So that's we're looking for a big turn here, and let me talk about the stock market. Now we got something special going on. It's not in these notes. It's in it. I have it. If you looked at my letter there, Larry, I have a calendar later in the letter, and I compile the planetary energy for all the markets for every day of the month on the calendar. And for coming up here into the weekend and into Monday, I had the biggest number I've ever had for the stock market in the whole time that I've done this since I think I started doing that calendar back in the 1980s. So there's something really huge building. It's not any one or two things. It was a series of one energy cluster, sort of medium-sized energy cluster after another, one right after the next one, kind of overlapping and spilling into the next one. And when I added it all up, I had a huge, huge number, the biggest number I've ever had. So we got some huge stuff coming up here in the next few days. I think the stock market could be, I think you said earlier in the show there, you were looking for a possible top here in the not too distant future, right?
Yes.
Yeah, so that would kind of fit, I think. And then we're looking for maybe within one trading day the Pluto retrograde. And the Pluto retrograde is because it's Pluto. Pluto has to do with cocoa hogs and bonds. And then we also have it in Capricorn, which is coffee. So, and the stock market's a big basket of everything, so it gets affected by almost everything. So we have those, what is that, about 6 markets that we want to pay attention to. Here's some more things coming up here. 21st after the close, we have the Moon's North Node, has to do with silver, and it's in Libra. That would be sugar, and is making an angle to Neptune and Pisces. So that would be oil. So if you like those markets, pay attention to those markets. The 21st is after Tuesday's close, over Tuesday night into Wednesday next week. We got the 24th
Norman,
coming.
we have a question from one of our listeners about the classification of Pluto, whether it's actually a planet or not. What is your feeling on that?
It's working just fine the whole time that they downgraded it. And I saw recently where, what's his name? I forget it now. What's that? The Tyson. What's his name? You know what I'm talking about?
Neil deGrasse Tyson. Yeah.
Exactly. He was he confessed to being complicit in getting that to happen, and he kind of sort of halfway apologized here recently about the whole deal. So I understand. I just saw something about NASA has some spacecraft out there taking pictures, and in about 2 or 3 months we're going to get some possible up-close pictures of Pluto for the first time ever.
Isn't there supposed to be a planet beyond Pluto that we don't know about?
What's that?
Isn't there supposed to be a planet beyond Pluto that we don't know about?
Well, if we don't know about it, then we don't know about it. I don't know what to say.
I'd heard that there was supposed to be one out there. I don't know. I don't, what I know about this. You could write on the head of a pen in bold-faced type, but you certainly know it, and I certainly appreciate it. So we really want to watch the action on Thursday, the 16th of April, which is the day before on the 7th. Oh, Norman, stay with us for the break, okay? We'll be right back.
All right.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. EverBank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Back, and we're finishing up with Norm Winsky of Astro Trends. Norm, are you still with us?
He's trying to call me. We'll just ignore it.
Okay, listen.
Larry, I know we're short on time, so I forgot to mention one little thing. I know one of your listeners earlier was asking about silver, and I forgot to mention that date I had for after the close on the 21st, the planetary event happening there, that also included silver. That was involving the moon's north node, so that indicates silver. Looking ahead here real quick, we have kind of a window coming up after the next Friday, a week from Friday's close for a couple of things, especially the U.S. financials there. So you have the U.S. stocks, T-bonds, and U.S. dollar, and that's pretty much the biggest stuff for the rest of the month. I think whichever way for the stock market, whichever way in several of these markets, be with the Pluto thing, well, especially the stock market, whichever way it resolves itself by Tuesday, that's probably going to be the trend for the rest of the month. I see this thing either reversing or breaking out. It's going to be a big inflection point there. But no later than Monday, some of these other markets may go a day or so earlier. Let's go look at the charts real quick, Larry. How much time do we have?
Well, I have a question from one of our listeners, and he says, "Do you have a Bradley adjusted for inversions for the whole year, or do you just do it a month at a time?"
I do it 1 month at a time. I do have some longer-term forecasting models. If we have time, we can go into those. Those are called the fractals. When you call me, you would tell me you want to look at the fractals, and we'll do that. those are fantastic. You mentioned the bonds earlier, how people were wrong on the bonds and interest rates last year. I have that chart here in my presentation if we have time. How many minutes do we have left, Larry?
We don't have much. We have just a few minutes, so we just want to cover the smaller things that we have.
Express version here now. Just look at the charts here real quickly. You can see the stocks, bonds, and the dollar all have one thing in common. They kind of have contracting ranges here, kind of trading into triangle wedgie kind of formations here. And so I think this is all probably may get resolved here in the next few trading days. Cocoa is we're also looking for a change in the cocoa. You got a little short-term up channel there. Might be topping out here in the next couple days. Looking ahead here, we got the coffee. Coffee looks really interesting. I don't know if you look at that, Larry, but it's been making a kind of a interesting possible base here, consolidation since early March. We're coming down here to the support, 132 on July. And if it holds that level, then it could be turning around here in the next day or two. If it breaks that level, then Katie bar the door. I think I first heard that from you, maybe, Larry. So, and then we say the hogs are kind of the opposite. Sure. They're kind of up toward the top of their channel, and they might be making a little short-term top here on the hogs. They got crude oil coming up here for next week. There's the crude oil chart. And it's I think I heard you say earlier, and my chart confirms this, that we could get up to about $48. I mean, $58, make that $58. And you can see that on the chart here where they have the your resistance is. And it looks like it's doing a little up channel here, and probably we'd be looking for a top there early, middle of next week. There's your silver chart. It's kind of mid-range. Probably looks like it might be pulling back here to support into the middle of next week. Moving ahead,
Norman, if someone wants to get in touch with you, we've only got about a minute or so left. Okay, what is the best way to
Please call
reach you?
Norm. Call me at I'm in Florida, and you get OUSA at 239-594-3939. That's 239-594-3939. You can also contact me on Skype at norm.winski. That's norm.winski. And you can get a free letter. You can get a free class to go with the letter. Teach you the fractals coming up here on the next page. And let me just flash the T-bond chart. It's amazing. This is the thing you were talking about earlier, how everybody was wrong. I remember turning on CNBC in the earlier part of the year. They all were saying what you said, Larry, that they were all looking for interest rates to go up, bonds to go down. The blue bars were the forecasts. I did that back in February 2014. And the black bars are what actually happened. It's pretty amazing. Here's the trade currencies. I got the inverted British pound.
This is it. This is the end of the show, folks. Live every day in an attitude of gratitude, and may God bless.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.